Question 1. Which of the following best describes the primary responsibility of an insurance adjuster in the claims process? A. The adjuster determines the settlement amount and finalizes the claim without input from the policyholder. B. The adjuster investigates the claim, determines the extent of the loss, and ensures that the policyholder receives fair compensation according to the policy terms. C. The adjuster negotiates with legal teams to decide liability based on public opinions and media reports. D. The adjuster advises the policyholder on how to pursue a lawsuit against the insurer for underpayment. Answer. B. The adjuster investigates the claim, determines the extent of the loss, and ensures that the policyholder receives fair compensation according to the policy terms. Explanation. The adjuster's primary role is to investigate the claim, assess the loss, and ensure the settlement aligns with the policy terms. They gather relevant evidence, conduct interviews, and determine coverage. According to Vermont insurance regulations, adjusters are expected to operate with fairness and professionalism to resolve claims promptly. The other options are incorrect because the adjuster does not finalize claims without input from the policyholder, does not base decisions on external media or public opinions, and does not directly advise the policyholder to pursue legal action. Question 2. Scenario. Mr. Davis has filed a claim for property damage to his home after a storm. During the investigation, the adjuster finds evidence of pre-existing damage. What should the adjuster do next? A. Approve the full claim amount as per the policy's coverage for storm-related damage, as the pre-existing damage is irrelevant. B. Deny the claim completely because of the pre-existing damage, as it was not caused by the storm. C. Only approve the part of the damage that is directly related to the storm and exclude the pre-existing damage from the claim. D. Ask Mr. Davis to submit a separate claim for the pre-existing damage to be assessed separately. Answer. C. Only approve the part of the damage that is directly related to the storm and exclude the pre-existing damage from the claim. Explanation. Insurance policies typically exclude coverage for pre-existing damage. In Vermont, as per the claims process and property insurance rules, adjusters must ensure that only damage directly caused by the covered peril, in this case the storm, is compensated. The other options are incorrect because approving the full claim without consideration of pre-existing damage violates the policy terms. Denying the claim entirely disregards the possibility of valid storm-related damage. Asking for a separate claim for pre-existing damage is unnecessary, as that damage is not part of the covered storm claim. Question 3. Which of the following statements regarding subrogation in the insurance claims process is true? A. Subrogation allows the insurance company to recover funds from a third party responsible for the insured's loss after paying the claim. B. Subrogation allows the insured to pursue legal action against the insurer to recover claim payments. C. Subrogation is only applicable in property insurance claims and does not apply to casualty claims. D. Subrogation is optional for the insurance company and can be waived by the policyholder at any time. Answer A. Subrogation allows the insurance company to recover funds from a third party responsible for the insured's loss after paying the claim. Explanation. Subrogation is a legal principle that allows an insurance company to recover the amount it has paid to the policyholder for a claim from the third party responsible for the loss. This is standard practice in both property and casualty claims. Vermont insurance law and industry standards require insurance companies to pursue subrogation when applicable to prevent unjust enrichment. The other options are incorrect because Option B is incorrect because subrogation involves the insurer, not the insured, pursuing the third party. Option C is incorrect because subrogation applies to both property and casualty claims. Option D is incorrect because subrogation cannot be waived by the policyholder. It is a right of the insurer. Question 4. Which of the following is true regarding an insurance adjuster's ethical obligations when investigating a claim? A. The adjuster must always favor the policyholder's interests over the insurer's interests. B. The adjuster must act impartially and in good faith, ensuring a fair outcome for both the insurer and the policyholder. C. The adjuster should prioritize quick settlement even if it compromises a thorough investigation. D. The adjuster has the discretion to overlook certain claims details if the claimant is a long-term customer of the insurer. Answer B. The adjuster must act impartially and in good faith, ensuring a fair outcome for both the insurer and the policyholder. Explanation. Insurance adjusters are bound by ethical guidelines that require them to act impartially, professionally, and in good faith. Their role is to ensure that claims are evaluated fairly and that the outcome aligns with the policy's terms. Vermont's insurance regulations emphasize the need for fairness and the avoidance of conflicts of interest in the claims process. The other options are incorrect because Option A is biased and goes against the principle of impartiality. Option C contradicts the need for a thorough and complete investigation. Option D is ethically unsound as it could lead to biased or unfair claim outcomes. Question 5. Scenario: Mr. Thompson has filed a bodily injury claim after a car accident, alleging that the other driver's negligence caused the accident. The adjuster has reviewed the police report and medical records. What should the adjuster do next? A. Immediately deny the claim since the adjuster has no authority to decide liability. B. Accept the claim based on the medical records without further investigation as medical evidence alone is sufficient. C. Determine whether liability rests with the other driver considering all evidence, including the police report, medical records, and witness statements. D. Settle the claim based solely on the insured's account of the accident, as they are the policyholder. Answer: C. Determine whether liability rests with the other driver considering all evidence, including the police report, medical records, and witness statements. Explanation: in the case of bodily injury claims, the adjuster must conduct a thorough investigation, including reviewing all available evidence, e.g., police reports, medical records, witness statements, to determine liability. Vermont law requires a careful and comprehensive approach to claims investigations to ensure accurate liability determinations. Option A is incorrect because the adjuster plays a key role in evaluating liability. Option B is incorrect because medical records alone do not provide a full picture of liability. Option D is incorrect because the adjuster must objectively assess all available evidence, not just the policyholder's statement. Question 6. Which of the following is a typical example of insurance fraud that an adjuster should be vigilant about during claims investigations? A. A claimant submits medical records with inflated charges to seek higher reimbursement than warranted. B. A policyholder provides a thorough and accurate description of the damages incurred. C. A claimant contacts the insurance company promptly after an accident occurs. D. A policyholder asks the adjuster for a detailed explanation of the claim process. Answer A. A claimant submits medical records with inflated charges to seek higher reimbursement than warranted. Explanation: insurance fraud often involves submitting falsified or exaggerated information to obtain more than what is owed under the policy. In this case, submitting inflated medical charges is a clear example of fraud. Vermont law mandates that adjusters remain vigilant to red flags like inconsistent records or questionable claims to prevent fraud. The other options are all examples of legitimate actions that do not involve fraud. Question 7. Which of the following is true regarding the loss evaluation method known as actual cash value, CVA? ACV includes the cost of replacing damaged property with new items without any depreciation. BACV takes into account depreciation, meaning the payout is based on the value of the property at the time of loss minus depreciation. C. A CV is only applicable for commercial property claims and not for personal property claims. D. A CV is typically used in cases where the policyholder requests a replacement cost settlement. Answer: B. ACV takes into account depreciation, meaning the payout is based on the value of the property at the time of loss minus depreciation. Explanation: actual cash value, CEV, is a loss evaluation method that considers depreciation, meaning the payout is reduced by the depreciation of the property at the time of the loss. This method is common in property insurance claims. Vermont regulations and industry standards require adjusters to calculate a CV carefully, ensuring that the depreciated value reflects the fair value of the damaged property. Option is incorrect because a CV does not account for full replacement value. Option C is incorrect because a CV applies to both personal and commercial property claims. Option D is incorrect because a CV is different from replacement cost, which involves full compensation without depreciation. Question 8. Which of the following is the most common approach to resolving disputes in the claims process when an insurer and policyholder cannot agree on a settlement? A. The adjuster makes a final decision without any input from the policyholder. B. The policyholder is required to accept whatever the adjuster decides, regardless of their opinion. C. Mediation or arbitration is often used to resolve disputes outside of the courtroom. D. The dispute automatically leads to a lawsuit with no possibility for settlement negotiation. Answer: C. Mediation or arbitration is often used to resolve disputes outside of the courtroom. Explanation: in situations where the insurer and policyholder disagree on a settlement, alternative dispute resolution methods such as mediation or arbitration are commonly used. These methods help avoid lengthy and costly litigation Vermont's insurance regulations encourage these processes as they often result in faster, more equitable outcomes for both parties. The other options are incorrect because option A overlooks the need for collaboration and fairness in decision making. Option B disregards the policyholder's rights to contest the decision. Option D assumes that lawsuits are inevitable, which is not the case in most disputes. Question 9. What should an insurance adjuster do when faced with a claim that involves multiple parties, such as a complex commercial property loss? A. Handle the claim using the standard procedures for simple claims without any special consideration for the complexity of the loss. B. Focus only on the primary policyholder's interests, disregarding any other parties involved. C. Consider all parties involved in the loss, assess their interests, and handle the claim with attention to the complexity of the situation. D. Immediately escalate the claim to legal counsel without conducting an independent investigation. Answer. C. Consider all parties involved in the loss, assess their interests, and handle the claim with attention to the complexity of the situation. Explanation. When dealing with complex claims involving multiple parties, the adjuster must consider the interests and rights of all parties involved. This includes evaluating liability, damages, and coverage for each party. Vermont insurance regulations require adjusters to approach such claims methodically and ensure that all parties are fairly treated. Option is incorrect because simple procedures may not be sufficient for complex claims. Option B is incorrect because the interests of other parties must be considered. Option D is incorrect because escalation should not replace proper investigation. Question 10. Which of the following is a common example of a coverage exclusion in most homeowners insurance policies? A. Damage caused by fire, which is typically covered by the policy. B. Damage caused by flooding, which is often excluded from coverage under a standard homeowners policy. C. Theft of personal property, which is typically covered by most policies. D. Damage from a broken pipe, which is generally covered under most policies. Answer. B. Damage caused by flooding, which is often excluded from coverage under standard homeowners policy. Explanation. Flood damage is a common exclusion in most standard homeowners insurance policies. To cover flood damage, policyholders generally need to purchase a separate flood insurance policy. Vermont law and industry standards typically align with this exclusion, as flooding is considered a high-risk event that requires specialized coverage. The other options are incorrect because fire, theft, and damage from a broken pipe are typically covered under most homeowners policies, subject to certain conditions and limitations. Question 11. Which of the following is an example of a covered peril under a standard homeowners insurance policy? A. Earthquake damage. B. Flood damage. C. Theft of personal property. D. Nuclear accident. Answer. C. Theft of personal property. Explanation. A standard homeowners insurance policy typically covers theft of personal property, which is considered a covered peril. Earthquake and flood damage are usually excluded, requiring separate coverage, and nuclear accidents are also generally excluded due to the extreme nature of such events. Therefore, option C is the correct answer. Question 12. Which of the following must be provided to a policyholder within 15 days of receiving a claim under Vermont law? A. The settlement check. B. An explanation of the insurer's position regarding the claim. C. A policyholder's premium refund. D. A request for additional premiums. Answer. B. An explanation of the insurer's position regarding the claim. Explanation. Vermont law requires insurers to provide an explanation of their position regarding a claim within 15 days of receiving it. This ensures transparency and keeps the policyholder informed about the progress and decisions related to their claim. Other options do not align with Vermont's requirements for claims handling. Question 13. What is the primary purpose of a waiver of subrogation clause in an insurance policy? A. To limit the coverage provided by the insurer. B. To allow the insurer to pursue legal action against the at-fault party. C. To prevent the insurer from pursuing legal action against third parties after a claim is paid. D. To ensure that no claims are paid by the insurer. Answer. C. To prevent the insurer from pursuing legal action against third parties after a claim is paid. Explanation. A waiver of subrogation clause prevents the insurer from pursuing legal action against the third party who caused the loss after a claim is paid. This is often used in commercial insurance policies to protect business relationships. Option B is incorrect because it goes against the purpose of the waiver of subrogation. The other options are unrelated to the purpose of the clause. Question 14. Which of the following is an example of an occurrence in insurance terminology? A. A single event or series of events that results in damage or injury, typically over a period of time. B. The decision by an insurer to deny a claim based on the policy terms. C. A specific amount of money paid for a claim settlement. D. The formal request for insurance coverage from a policyholder. Answer A. A single event or series of events that results in damage or injury, typically over a period of time. Explanation: an occurrence refers to an event or series of events that leads to damage, injury, or loss. It is usually tied to a specific time period under an insurance policy. Option B refers to a claim denial, which is not an occurrence. Option C is related to claim settlement, and option D pertains to the application for insurance. Question 15. Which of the following is the key function of an insurance adjuster during the claims process? A. To approve claims without evaluating the underlying facts. B. To advocate for the insurer and protect its financial interests. C. To ensure that claims are resolved quickly regardless of the accuracy of the investigation. D. To investigate the facts of a claim, assess damages, and determine the appropriate compensation. Answer D. To investigate the facts of a claim, assess damages, and determine the appropriate compensation. Explanation: an insurance adjuster's primary role is to conduct a thorough investigation of a claim, assess the damages, and determine an appropriate settlement. The adjuster must remain impartial, ensuring that the claims process is fair for both the policyholder and the insurer. The other options misrepresent the role of the adjuster in the claims process. Question 16. Scenario: a homeowner's property has been damaged by fire. The homeowner has a $300,000 policy with a $1,000 deductible. The cost of repairs is $50,000. How much will the insurer pay to the homeowner after applying the deductible? A. $49,000. B. $50,000. C. $300,000. D. $51,000. Answer A. $49,000. Explanation: the homeowner's deductible is $1,000, which is subtracted from the total claim amount. The insurer will pay $50,000, the cost of repairs minus the $1,000 deductible, resulting in a payment of $49,000. The other options are incorrect because they either do not account for the deductible or overstate the amount payable. Question 17. Which of the following describes a moral hazard in the context of insurance? A. A situation where the insured has an incentive to reduce the risk of a loss. B. A situation where the insurer is financially motivated to take on higher risks. C. A situation where the insured may intentionally cause a loss to collect an insurance payout. D. A situation where the insurer fails to fulfill its obligations under the policy. Answer C. A situation where the insured may intentionally cause a loss to collect an insurance payout. Explanation: a moral hazard occurs when the insured takes actions that increase the likelihood of a loss or may intentionally cause a loss because they know they will be compensated by insurance. This is typically seen as unethical and is discouraged by insurers. The other options describe risk-reducing or unethical behaviors from the insurer side, not the insured. Question 18. What is underwriting in the context of insurance? A. The process of paying out claims to policyholders. B. The process of investigating and determining the cause of a claim. C. The process of assessing risk and determining the terms of insurance coverage. D. The process of managing the investments of an insurance company. Answer C. The process of assessing risk and determining the terms of insurance coverage. Explanation: underwriting is the process by which an insurance company evaluates the risk associated with insuring a person, property, or entity and determines the terms of coverage, including premiums and limits. This process is crucial to the profitability and sustainability of insurance companies. The other options are unrelated to underwriting. Question 19. Which of the following would be considered a replacement cost in an insurance policy? A. The amount the insured would receive after depreciation is deducted from the original value of the property. B. The cost to replace damaged property with an equivalent item without considering depreciation. C. The amount paid by the insurer to settle a liability claim. D. The policyholder's original investment in the property. Answer B. The cost to replace damaged property with an equivalent item without considering depreciation. Explanation: replacement cost is the amount it would take to replace damaged property with a new equivalent item without subtracting depreciation. This is typically higher than actual cash value, which accounts for depreciation. The other options incorrectly describe different aspects of insurance coverage. Question 20. Which of the following is a common example of a named peril in an insurance policy? A. Theft of personal property. B. Damage from an earthquake. C. Loss of income due to job loss. D. Damage from the insured's own negligence. Answer A. Theft of personal property. Explanation. A named peril is a specific risk or event listed in an insurance policy that is covered. Theft of personal property is a common named peril in many homeowners' insurance policies. Earthquake damage is often excluded, while loss of income and damage due to negligence are not typically covered by standard policies. Question 21. Which of the following is typically excluded from a standard homeowners insurance policy? A. Fire damage. B. Windstorm damage. C. Damage caused by termites. D. Theft of personal property. Answer. C. Damage caused by termites. Explanation. Damage caused by termites and other pests is typically excluded from standard homeowners insurance policies as these types of damage are considered preventable and maintenance related. Fire, windstorm, and theft of personal property are commonly covered perils under most standard homeowners policies. Question 22. Which type of insurance covers medical expenses for employees who are injured while working? A. Health insurance. B. Workers' compensation insurance. C. Disability insurance. D. General liability insurance. Answer. B. Workers' compensation insurance. Explanation. Workers' compensation insurance provides coverage for medical expenses, rehabilitation costs, and lost wages for employees who are injured on the job. This type of insurance is mandatory in most states for employers. The other options provide coverage in different contexts but do not specifically cover work-related injuries. Question 23. Which of the following best describes the coinsurance clause in a property insurance policy? A. The policyholder must pay a percentage of the total claim cost above the deductible. B. The insurer and policyholder share the risk of a claim based on a predetermined percentage. C. The policyholder's coverage limit must equal the full replacement cost of the insured property. D. The insurer pays for all repairs after the deductible is met, regardless of the policyholder's contribution. Answer. B. The insurer and policyholder share the risk of a claim based on a predetermined percentage. Explanation. Coinsurance requires the policyholder to maintain a certain percentage of the replacement value of the insured property. If the policyholder does not maintain this level of coverage, they may have to bear part of the loss themselves. The other options misrepresent how coinsurance works. Question 24. Which of the following is typically covered under comprehensive automobile insurance? A. Damage to your vehicle from a collision with another vehicle. B. Theft of your vehicle or its contents. C. Damage to your vehicle from a driver who is uninsured. D. Medical expenses for injuries caused in an accident. Answer. B. Theft of your vehicle or its contents. Explanation. Comprehensive automobile insurance covers damage to your vehicle caused by events other than collisions, such as theft, vandalism, fire, or natural disasters. Collision insurance covers damage from accidents involving other vehicles, while uninsured motorist insurance covers accidents involving an uninsured driver. Medical expenses typically fall under medical or personal injury protection coverage. Question 25. Which of the following is a characteristic of an actual cash value received in an insurance policy? A. It pays the replacement cost of damaged property without considering depreciation. B. It includes the cost of replacing damaged property with an equivalent item minus depreciation. C. It provides a fixed amount regardless of the replacement cost or condition of the property. D. It covers all damage, even if the insured is at fault. Answer. B. It includes the cost of replacing damaged property with an equivalent item minus depreciation. Explanation. Actual cash value, SEV, is the cost to replace property minus depreciation. It is a more affordable option for the insurer, but results in a lower payout for the insured compared to replacement cost coverage, which does not account for depreciation. The other options do not accurately describe ACV. Question 26. What is the primary function of reinsurance? A. To protect insurance companies from taking on too much risk. B. To provide direct coverage for policyholders. C. To manage the claims process for individual policyholders. D. To limit the amount of coverage a policyholder can purchase. Answer A. To protect insurance companies from taking on too much risk. Explanation. Reinsurance is a practice where an insurance company transfers part of its risk to another insurance company to limit its exposure to large claims. This helps insurers manage their financial stability and ensure they can cover significant losses. It does not directly provide coverage to policyholders or manage claims for individuals. Question 27. Which of the following is a standard provision of an insurance policy that allows the insurer to cancel the policy after a certain period? A. Subrogation clause. B. Cancellation clause. C. Exclusion clause. D. Insuring agreement. Answer: B. Cancellation clause. Explanation: a cancellation clause outlines the conditions under which an insurer can cancel a policy, typically after a certain period has passed. This provision is common in many types of insurance policies. The subrogation clause deals with the insurer's right to recover losses. The exclusion clause specifies what is not covered, and the insuring agreement details the coverage provided. Question 20. Which of the following statements best describes professional liability insurance? A. It covers damages resulting from accidents caused by employees. B. It provides coverage for property damage to third parties. C. It protects professionals against claims of negligence or malpractice. D. It covers business interruptions caused by natural disasters. Answer: C. It protects professionals against claims of negligence or malpractice. Explanation: professional liability insurance, also known as errors and omissions (EO) insurance, protects professionals such as doctors, lawyers, and consultants from claims of negligence, errors, or malpractice in the course of their professional duties. It does not cover property damage or business interruptions. Question 29. What is the deductible in an insurance policy? A. The amount the insurer will pay for a covered loss. B. The amount the policyholder must pay before the insurance coverage kicks in. C. The maximum limit that the insurer will pay for a claim. D. The amount the policyholder must pay annually for their insurance policy. Answer: B. The amount the policyholder must pay before the insurance coverage kicks in. Explanation: the deductible is the amount the policyholder must pay out of pocket before the insurer starts to pay it for covered losses. A higher deductible typically results in a lower premium as the policyholder assumes more risk. It is not the insurer's payment amount or the annual premium. Question 30. Which type of insurance covers liability for bodily injury or property damage caused by a business's operations? A. General liability insurance. B. Commercial auto insurance. C. Professional liability insurance. D. Product liability insurance. Answer: A. General liability insurance. Explanation: general liability insurance covers bodily injury and property damage caused by the business's operations or activities. It is essential for most businesses to protect themselves against lawsuits or claims arising from accidents on their premises or as a result of their services. Other types of insurance cover specific business needs, such as auto, professional, or product-related liabilities.